Okay, welcome everyone back to the Financial Focus Smart Investing, where we talk everything markets with two super guru. I don't know how, say more strong, emphasize on your knowledge, Zach. So Zach Meir and Clem Chambers that is joining very soon. Clem is the CEO of SVML and Online Blockchain, and just want to say, SVML is going through some interesting, I would say, movement. So definitely something to watch, ticker AFN, and we leave it like that. Okay, Zach, welcome.
Hello, Steffi. How are you doing?
I'm fine. I see, you have a beautiful sky behind you where I have got.
Yes, I thought the sky looked more beautiful than I do, so I thought that I would have the sky there as the more important visual. But it's a very spring-like. But no, you're saying we're sort of very seasoned gurus. The first thing I remember in the financial markets was the oil crisis in 1973. And so that's what got me excited about the financial markets at the age of 7. So you can imagine what a sad child I was. But at that time, we had the start of, that was the first inflationary nightmare. So you had oil prices doubling or trebling, and then everything else went pear-shaped. The stock market collapsed in 73, 74 as well. And you had inflation up to 20% or 25%, I think, in this country too. They then made things even worse by raising interest rates up to the level of the inflation rate, or half the level of the inflation rate. And the whole thing was a complete disaster. So that's actually why I'm really anti using inflation, using interest rates to try and control prices. I think it's a complete disaster because you tend to throw out the baby with the bathwater. So you have good companies going down, and obviously bad companies which might remain in business and keep people employed will go out of business, and they will then you then have unemployment. So I think interest rates are the worst thing that you can do. And I think the reason we have had relative stability for 20 years is because we stopped using interest rates or raising interest rates to try and control the economy. So it's really, you won't hear that anywhere else, probably for various reasons which I haven't thought of, but I think it's a very serious point. So that's something which I think is a unique thing to say. What's your next? Is there any point that you wanted me to address? Because I can't remember what you asked me now.
Yeah, I mean, Clem is joining as well, so we can see what are his views on the latest CPI numbers, which, the way that the media picture them is really scary because they, all the headline, that's, the highest inflation we have seen since the 80s, and, all this kind of thing that probably make investors a bit more nervous. Clem, welcome to the show.
Hey, I'm trying to sort my camera out as always. Skype just grabs my,
I think
my camera and won't give it over to Zoom. It's the dark powers of Microsoft at work. And so I'm just trying to get it all sorted. Let me see if I click. Yay! I just killed my Skype with the 3 fingers of doom. So I'm back.
Okay, Clem, you're quite cheer up. That's great.
Well, I mean, the thing that I think about with interest rates, nothing to do with money supply, right? You put up interest rates to suck money out of the system, from the system into your central bank or to your government, and that makes money scarce. That's the old way of doing it. But if you're just printing money and you make everybody able to get in the queue for money at 1%, 2%, 3%, 4%, 5%, 6%, 7%, 9%, whatever percent you're charging, there's going to be a queue a mile long, and they're going to get their money, and they're going to carry on spending it, and you're going to get inflation. Inflation is not about interest rates; it's about money supply. Turkey has 14% interest rates, down from 20%, and they've got 42% inflation.
Okay, and they are still alive, right? So people are still living in Turkey.
Well, not in the way I'd enjoy, I think. But go on, Zach. What?
No. Just I think we're almost agreeing from a different angle. I'm sort of saying, because my argument's probably less sophisticated than yours, but just having seen the 70s and the other eras when the interest rates were really used to control the economy, or allegedly control the economy, all that happens is you lose people money through the stock market or through businesses going bust, and you throw the baby out with the bathwater, and you don't necessarily.
That's exactly right. But you're not doing it by accident. You're doing it on purpose, because the only way you can have proper moral economics is by killing the wastrels who are borrowing money and doing all the naughty things with money, like borrow. I mean, borrowing's evil, right? Everybody knows that. It's in the Bible. It says it's evil. It says, in fact, don't do it. You'll go to hell. And it's the whole idea of debt being evil and all that stuff comes with, oh, well, we've got too much inflation, got too many bad things, jack up interest rates and stop that borrowing, stop that. There used to be credit controls. You couldn't actually borrow money to buy a settee back in the 70s. It was against the law.
Isn't that money? So the money, what it should be is there's a credit squeeze. There's not an interest rate hike.
Well, yes, but of course the crowds don't understand money supply, and they don't understand interest rates and all that stuff. And therefore, if you're going to want to look good in newspapers, because the media's just going to say, why are interest rates so low? Oh, it's all your fault. Interest rates. You should put interest rates up. And what's the point in telling?
But this is
that's not going to work.
Yeah, but there's another very important point. The media, the role of the media in this is absolutely diabolical, because it's really occupied solely by people who are bitter and jealous and envious of people being successful. And
it always has been. It's always been evil. Media's always been evil. Don't you remember back in the 70s when they would pillory people like Elton John for being gay? And they would try to destroy them on that basis. Don't you remember that? I remember that. I remember all the vicious people that the media's been spouting ever since I was a tiny little child. So you've got no change there.
Yeah. So, but they, it's the envy and the jealousy and the spite that they have, and so when you have inflation, they look it up and they say, well, let's have interest rates up so all these rich people get punished, and it's just wrong. I mean, and also it steers politicians in the wrong direction as well, because when they don't raise interest rates, then they start getting pilloried by the press. So it really is it's a negative loop there. But the answer, so the question is, what is the solution now to where we are?
Well, I think you're asking the wrong question. The question should be, where are we now? And the answer is, the government is bust, right? And governments are always bust at the end of great dramas like wars and famines and plagues. The four horsemen of the apocalypse always bankrupt the countries that they visit. So what do countries do when they're bankrupt? Well, all you need to do is go look at the end of the Second World War, when everybody was bankrupt apart from America. And what did they do next? They inflated it away. It wasn't by accident. They inflated it away because they had to. And that's what they're doing now. It's not a mistake. These people aren't blithering idiots. I mean, there might be all sorts of things, but stupid they're not. And they've got this vast debt. They can't pay it off by having low inflation, can they? Or deflation, so their debts get even worse? No, they've got to inflate them away, like they did at the end of the Second World War, like they did at the end of the First World War, like they did at the end of the Napoleonic War, etc. Like the Romans did at the end of punching up with barbarians. It's what governments do at the end of disasters. They inflate away their debts. It's a flat tax on everybody. The wealth of the world has gone down by probably 20% in the last 2 years. So everybody's 20% poorer. So what you do is you create.
Well, that's why, Clem, that's why the Chanel bags now cost $6,000 instead of $3,500. I mean,
but the value of Chanel bags has not gone up. The value of your money has gone down.
Yeah.
Because wealth has been destroyed, say 20%. So for everybody to have the same amount of money in their bank, it has to lose 20% of its value, doesn't it? And they're not going to say, oh, by the way, boys and girls, sad to say, we're going to take away 20% of your money. We're going to cut your salary. We're going to cut the national health. We're going to cut defense. We're going to fire all our bureaucrats. We're going to cut their pensions. No, they just do it by inflating money, by making the money worth less. Bang, job done. The question then becomes, how long do they need to do it for? It's about 4 to 5 years, depending on if the wheels come off again. So we're going to have 5, 6, 7, 8% inflation for 3 to 4 to 5 years. Yeah. Now they could say, well, let's just have it all in one go. Bang, let's have 20% inflation. Then we can come along and blame it on everybody else and then slam it out, slam down the money supply. And we're back. But they won't do that. They always kick the can down the road. They always boil the frog. So it's going to be 6 or 7% for 3 or 4 years. And they're going to say, it's them over there. They did it. It's not us. It's him. Oh, yes, it is a problem, isn't it? It's more than we thought it was. Oh, yes, we're trying really, really hard now. We're really, really hard. And then 3 years down the line, suddenly, bang, it'll go away because they're clamped down on money supply.
I've got one question which hasn't been talked about. Again, I've tried to come up with these, but if, let's say, interest rates go up to 5% or 7%, the same level as inflation, that means that if you've got, £1 million cash, you put it in the bank and you get a nice income from on deposit. That's not a way of shrinking the money supply, is it? I mean, it doesn't work like that, does it? Because you've got 7% inflation, you've got 7% interest rates. If you spend your interest rates to keep yourself afloat, your value of your money goes down by 7% every year. So you're getting a haircut because you're spending your capital. Yeah, but what I'm saying, but for the last 20 years, let's say, you got nothing on deposit effectively. It was 1% or probably still 0.5%, 0.25% that is the interest on is the payout on bank deposits. But if they raised, and they obviously haven't passed on the rate rise to savers. I'm talking about savers here. Savers are a massive part of the.
So you're making the Erdogan point, Mr. President Erdogan in Turkey. He says, well, high interest rates cause inflation because you have to print more money to pay the interest. So by definition, if you're having to create all this new money to pay the money on deposit, you're going to get increase in money supply, and that's an inflationary vicious circle.
Yes.
And that is not new monetary theory. That's new monetary theory. Because everyone says, you're mad, Mr. Erdogan. You're mad. You're crazy. How could that possibly be? But he's got a point. But like most things, there's an arc. At one end it works, and at the other end it doesn't. And
but what I'm saying is if they did actually raise interest rates in the Bank of England, put it up to 5% or 7%, that increased money supply of savers would be very inflationary as well. I mean, I would take all my money out of the stock market and maybe some of it out of the housing market, open up a TSB account, get 5% on £1 million, and I'd be a happy chappy.
Well, that's a very deflationary, because you're going to crash asset prices. And so all that leverage you get from putting $10 into the stock market and increasing the market cap of the company by $30, all that goes into reverse. So if people took all their money out to get 7% in a building society and house prices halve, the deflationary impact of that would be vast. In fact, for me, the question is, if I really was the Fed and I really did want to get inflation rid of, it'd be very simple. I'd just crash the stock market. And then everybody's leverage goes to hell and everybody goes bust because they can't put collateral up. And everybody pulls money out of the market and it goes from inflating Apple to be worth $1 trillion of collateralized assets into a pile of peanuts.
But Clem, can that happen? I mean...
Of course it can, yeah.
Right.
Is it going to happen? Look, the thing to remember, back in the 70s, people in the 70s were flaming muppets. People like Ted Heath, Anthony Barber, the Chancellor, flaming muppets. They had no clue. They didn't know their brass from their oboe. Yeah, they were just utterly rubbish. These days, these central bankers, they've got brains the size of a planet. These are not stupid people. These are very, 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 very clever people with the very, very, very best economists. And they know the markets, particularly I'm not sure about the UK, but certainly in the US, they know those markets inside out because they used to do them themselves personally. So they've been walking a tightrope ever since the credit crash in 2007. And they've done a brilliant job keeping the wheels on because it's a fabulously complicated system out there, absolutely fabulously complicated. The mathematics of complexity in the markets is just gigantic. And they've managed to keep the wheels on. They've had to totally reinvent the way that economics is understood and manipulated with QE and QT. Unorthodox monetary policy it was called once, remember? Now it's very orthodox. And that's what they're using to keep the wheels on because it's not about price, it's about liquidity. And liquidity is about how much is available, not the price of it. Yeah, you're in Japan. Imagine I'm a Japanese guy, okay? And I go up to my bank and I say, lend me 100 million, will you? I'm a good chap. And they go, yeah, sure, have 100 million. I'm paying 0.5% interest.
Yeah.
I can go throw a wild party for 50 years and nobody will even know, because I've only got to pay back 0.5% a year. And as long as I keep rolling it, in 50 years' time, I've still got 50 million left. So, you know, the way money works is that it's the availability of money, not the price, up to an extent. And the price becomes an issue when it's very expensive, not when it's expensive or medium or cheap. There's not one corporation that would be in business at the end of this year if they were told that they could not borrow money anymore. They'd all go bust. Every single manjack, perhaps Apple might still be there, right? But there's not one corporation, the FTSE 100, that couldn't borrow money at 10% for the next 3 years and still not be in business.
Yeah.
So it's the availability of money, not the price, that's important. And remember, most of these corporations have got debt stacked up for the next 10 years at buttons, right? So it's only the slither of new money that they'd have to pay more.
So basically, we are coming back to the point: the Fed can't make the economy go in bust, because
it can do what it likes, but what doesn't want to do is destroy American economy and American voters. And what it has to do is inflate away the debt of America at 5 to 7%, or 7% is the ideal number. I've been predicting 7% for quite some time now, which I feel smug about. All they've got to do is hold inflation at 7% for 4 or 5 years and get away with it, and everything's back to normal. Because GDP goes up, taxation goes up, the actual amount of debt in real terms goes down, and it crosses over after 3 or 4 years. And everything's back to normal.
Let's bring back here a couple of things that are quite important. Obviously, you know, these relate very much to the next election that is coming in America. So the government obviously has to take that in consideration, but also Russia, right? Russia is taking some interesting move towards Bitcoin. And it looks like, I mean, the question is what America is going to be doing to don't fall behind.
Well, look, there's the 4 horsemen of the apocalypse. And we just had one of them pay a visit. But that's nothing in comparison with the war. You can forget COVID as being an economic deal if there was anything bad happened between Russia and Europe and or America. And, you know, there's clearly America wants to, you know, get it on with Russia, because it's just obvious that they're stirring the pot furiously. And for that matter, the UK's been stirred. I mean, what the devil's the UK give a monkeys about Russia for? I mean, you know, it's like, you know, it doesn't do any trade with it. It's not nowhere near its borders, da da da. But anyway, it's what men with too much testosterone in government get into, you know. And of course, puts us all on the edge of oblivion. But, you know, if they can not be very, very stupid, which is very difficult for governments, then, you know, crypto's coming. It doesn't matter what shape it's going to be, it's coming. Because crypto is an industrial revolution of a new kind. It doesn't matter whether it's Bitcoin, it doesn't matter whether it's Ethereum. It is an industrial revolution because it cuts costs of various paperwork. I mean, I don't know about you, but my whole life is wading up to my waist in rubbish paperwork. And the blockchain is a destroyer of middlemen and paperwork. And once that genie's out of the bottle, you can't put it back. And therefore, it ain't going to go away. It isn't going to get small. It doesn't matter whether Russia takes Bitcoin or doesn't take Bitcoin. That's just short-term tactical noise. Long-term, strategically, it's the next industrial revolution. And it's here. And away it goes. You just got to jump on the right assets and ride them.
Are we back in the bull market with the crypto?
I doubt it. I mean, I think this little bounce we've had is actually based on the fact that probably Russians want to have a few Bitcoins at the moment. Yeah. And, you know, if that all calms down, like you'd hope it would, then, you know, that's going to be another leg down, but it doesn't matter. It's like us being sat here in 1985 saying, Apple went down 4% today. What do you think that means for Apple? You know, it's like, it's noise.
Okay, Zach, I see you quite quiet. Have you bought some crypto?
No, I'm just I'm speechless at Clem's comments and everything else, which
So you bought something and you say, "Oh fuck, it's gonna go down again."
no,
Oh, Pip, sorry.
I think crypto for the time being is stable. I do think it has a little bit of I'm sorry, it's an inflation hedge, but I think it has a little bit of that. Not it's obviously very too volatile to be of any hedge of anything. But I think the worst is over for crypto, and it'll be there. It's going to be as exciting as a lot of people want, and it's not going to be as bearish as other people want. And I think it's ironic. We are sort of almost like in the middle of the range. 35 to 40 is like a middling range. Nobody's too happy, nobody's too sad, and that's fine. But it did hold its trend line at 33,000, and so on that basis, I'm just saying it's okay. I do agree with Clem that it's a technology situation that Bitcoin represents, and the smart contracts and blockchain and all those things like that. They're not going away. Hopefully, they'll destroy most of the business that lawyers have and get out of us and rip us off on. So that's good. But the Bitcoin's too big it's too big to fail now. It's too useful for various people and various motives to go away. So I think the only threat, the real threat, would be obviously if it was made illegal. But how can anybody enforce that? So I think it's here to stay. But I think what is interesting is that we've got, just from what Clem says again, you sort of think, well, we had the global financial crisis in 2008. That was like the equivalent of the Wall Street crash of 1929. And now it feels like we're in 1938 or 1937 with Russia, Ukraine, and stuff like that. So the war games tend to be a sign of, they tend to accompany economic collapse or near collapse or turmoil. And it's very sad that we haven't been able to break out of that 20th century pattern with a nutty dictator, the megalomaniac type people in charge of various countries, not naming anybody in particular because they might find out where I live. But it's unbelievable. We still have that same kind of warmongering, and in the year 2022 to have the same stuff that you would have in 1922 beggars belief, really does.
I do think that government has improved a great deal since,
but the thing, you were saying, like, the people I remember from the 70s, the Barber and the Heath and all those people, completely clueless. But but even with all the brains and everything else, you still somehow get into the same situation of, runaway, the inflation and the warmongering and the this and the that. It's just the same. I mean, it's human nature doesn't change. That's the problem.
Well, I mean, whether the warmongering is highly planned, but certainly the inflation is. And I think that's the thing that people should embrace. It's not by accident. It's not happened by accident. It's by design. And if you think of it as something done on purpose, and you then think about why would you do that, it makes perfect sense.
I don't think people in government are clever enough for that. I've never seen any evidence.
It's not the people in government; it's the people at central banks.
I don't see that they're that clever. I don't think that I don't see the evidence for that.
They definitely are in the US. They definitely are in the US, without a doubt. I mean, a few years ago, I bumped into some SEC people, and they had brains the size of planets, and it was extremely impressive. But they trust me. People like Mario Draghi are not stupid.
I'm sure you're right, but you might be confusing power with brains.
Well, they've got the ultimate power because they control the purse strings. They are the power. If anything, the argument against them is that they're anti-democratic because they are the emperor because they control the money and therefore they control everything.
So but then you get back to, you don't really like Bitcoin at the moment because it's a bit flaky and this and that. So what we have really with this current position we're in now is a perfect storm, a perfect situation for commodities, for basically.
Absolutely, yeah. Absolutely, I'm all over them. and all over them like a rash. It's a very, very tricky situation, because while everybody else is going to have 20% of their perceived wealth removed, it's a very tricky situation in what amounts to a really serious bear market in terms of value of money and value of assets, to actually be on the right horses, to actually come away with a capital appreciation in real terms. Very, very tricky.
So Clem, are you saying that being in commodities right now is basically the best that you could do?
Least worst.
Right. But my question is, if we are thinking that the stock market might goes down, is not better to just sit on cash? Or would you still rather be in commodities?
It's rather like, you see, people always get these things mixed up. They think the bad news is when you hit the pavement. But the bad news is when you go out the 39th floor window. And we've gone out the 93rd floor window. And it's very, very tricky not to be in a mess when you hit the ground, or even to survive it. Yeah. Now, if you do survive the fall, even if all your legs are broken, you're doing well. Yeah. So when you hit the pavement and you're not dead, that's the good news. But we've gone out the window. You can't get back in the window. That's all happened.
Yeah.
So now it's all about the fall. And this inflation is effectively some kind of, safety net to block the fall onto hard tarmac. Because, any way you look at it, if anybody comes to me and says the last 2 years the wealth of the world's gone up, I want to know what part of the world they're in. Yeah, the value of wealth in the world has gone down. Now you could say it's 10%, you could say it's 20%, could be somewhere between the two, could be more, but I kind of feel it's 20, but it could be 10, but it is definitely a significant number of the global wealth has gone down. So people are going to be at least that worse off.
Yeah.
Now, if your numbers of dollars isn't going down, how are you poorer? If the value of your house number has gone up, how is the world poorer? Well, the world's poorer because the actual money itself has gone down in value. And that's where we are. So unless you've got something that's going to intrinsically go up 20% in real terms, you're going to take that haircut. Because the value of the world's wealth has gone down, because those sausages weren't made, that IKEA furniture wasn't made, that restaurant wasn't open, those people didn't go to the factory, education wasn't done, etc., etc.
So you don't want to be in cash?
Well, that's how everyone's going to get a haircut.
Yeah, exactly.
Yeah. So that's what's going to get haircutted. Some things are going to go down worse in value, and some things are not going to go down worse. And as Zach, I believe, rightly says, commodities is one of those things because you can't fake commodities. You can't dig them out the ground using funny money. You have to have bulldozers. You have to have people digging holes. It's hard money operation. It's not like a software house that goes, oh, I made some magical profits because my accountant was clever. No, you got to dig it out the ground. The trouble is the people that dig it out the ground are such a spicy bunch of people. You never know whether they've done it or not. So that's the flip side to that. But fundamentally, commodities go up at the rate that the value of money goes down. So at least it's a hedge. And if you use people that do dig, they've got leverage because their profit margins go up as a multiple of the price.
Yeah. And what about stocks with potential good purchase power, like, that will have to increase the price of the product because of inflation? Would those be attractive candidate for investors?
Zach, come on, Zach. You know me, I'll talk without stopping, so go on.
No, I mean, I suppose the shrinkflation of consumer goods companies is might be the way forward there. I don't know exactly how the mechanics would work, but I suppose if you're Unilever or Reckitt Benckiser or the beer companies, etc., you just keep ratcheting up prices by 5% over inflation and just keep going with that.
What about telecommunication, like Vodafone, for example?
Well, Vodafone's going to get taken over, isn't it? That's all over their chart.
Mm-hmm.
So that's what I think. But I might be totally wrong. But I mean, it's going. And they had a bid in for Italy, but why not take the whole lot out in one go? I mean, it's interesting. There should have been already lots of takeovers. And I think the lockdown has meant that people don't want to get on a plane and go and, put this stuff together. But once those doors are open, budget bargaining basement Britain is going to be on sale, isn't it? And, the BTs of this world, the Vodafones, everybody pretty much. I mean, Aviva is on a 6p. I mean,
well, no, that's only going to happen. Yeah, but that's only going to happen is blocked over for various years by the red tape and the what do you call it? This competition commission and all these other leeches that we have in our system. But I think that hopefully very soon we'll be in such a desperate state that the government will need the 150 billion that a US firm buys Vodafone for, or 50 billion for British Telecom, etc. So we'll just be so desperate that we just allow all the takeovers to happen just because we need the cash. So hopefully, Rolls-Royce or this company or that company, they won't come up with some spurious thing about it's in the national interest or it's defense sensitive or this or that. But I think one of the reasons that the UK stock market is underperformed so much is because they're not allowed to be takeovers, or they're so difficult, or there's so much red tape. And so hopefully that will change. Obviously not a change because of the Brexit thing, because we haven't really had a Brexit. But it hopefully will change because we just need the cash.
Well, I mean, I'm surprised it hasn't already started, but I should think that it might start RSN real soon now. So, I mean, it's very difficult to look at stocks when you're in what is basically a cyclical bear market. It's a bear market because the value of money is going down and the prices of your assets are not necessarily going up so much. Yeah. So that is going to be an interesting environment. My take is something I learned a long, long time ago. It doesn't matter how bad things are. It doesn't matter how difficult your situation. It doesn't matter what's going on in your country, how terrible that is. Somewhere in the world, there's a party going on. The trouble is you're not invited. So what you have to do is you have to find out where the party is and knock on the door, because there's always a party going on. When I was a kid in business, it was, Thatcher's years of wiping out Liverpool and shutting down all the coal mines, etc., and all that kind of post-apocalyptic industrial landscape. I was in computer games. The money was cashing out in every direction. You would never have known that, the boys from the black stuff were going around headbutting people in desperation. Everybody in the computer game business was like a bunch of frogs in springtime in the pond. They were jumping over everything. And that was what you've got to do in this situation. You've got to find out where the party is and knock on the door. And for me, that's Bitcoin. Well, it's not Bitcoin, it's blockchain. If you're in blockchain and you're doing that, you won't notice everything else. There'll be a party going on. You're in blockchain.
There's been a nice party going on in Umbria. Okay, that's it. Zaki went, it was over $6. I think it's still over $6.
Well, last time we spoke, I think it was $2. But
exactly.
The point is, I'm not a tactical person. I don't like to think, the last 3 weeks I've made a ton of money. I'm looking out 5 years.
Yeah.
And, that is blockchain. Umbria is a great project, but there are potentially lots of other great projects. This is where you need to be, because this is where the energy is. This is where the smartest people are doing the clever stuff. And there'll always be wealth going left and right, in the same way as if you were in a company that makes ball bearings. I'm sure it's been fine, but it's not like being an Apple, is it? No. So I think that's the thing to remember about all this stuff, is that find out where the party's going on, and it's not going to be something that you're going to get invited to. You've got to find it and you've got to go to it.
Yeah.
And that's, for me, is blockchain. So that's my strategy.
Okay, sounds good.
And technology, look, I mean, if you're a good programmer, and there's very few of them, if you're just an even okay programmer, if you can wave a piece of paper that says, I am one, I promise,
you still make
you're
money.
Employed, right?
Yeah.
If you are something else, you're in a hard place, aren't you?
It's very interesting, because what I see now is really the people that they are really successful. They are going at the top. They're building successful business. They are people with technical skills, and we couldn't say that. Perhaps maybe 10 years ago, you still have people that are good in sales. That they were going to be able to do quite a lot of stuff. Now I just see that all the successful people right now, they are people, they're developers. They're people that know how to code. They know how to build stuff, and you can see that quite clearly.
I think to an extent, though, you have to say, if you're going to be a success, you better be engaged in what you're doing.
Yeah.
And if you're engaged in almost anything these days, it's technical, isn't it?
Yeah.
So you have to be technically minded to be engaged. And if you're not engaged, you're not going to do well. And if you're not technically minded, you're not going to be engaged. And if you want to be engaged, either really into something,
No, I think that's very interesting. It's the year of having. So the era of having obviously a new economy skill is the easiest way, but in general, having a particular skill, whether it's charting the markets or interviewing people or having a knowledge of finance, or there's just the things which you need to be the best in the biggest fish in a small pond. I think it tends to be a very a niche player. And luckily these days there are many more niches than there used to be when Clem and I were young. So Clem was in that computer space in the 80s, which was rocket science, obviously compared to now. But I think that it is. I like the party analogy, but I also like that analogy of or that idea that you need to be the best at what you do in a particular speciality field. And that.
Well, I see. Oh, sorry. Carry on.
That's it.
Well, what I see, which in a sense horrifies me, is that you have to go a long way to find anybody that's really engaged in what they do these days.
Yeah.
Now, this work-life balance stuff is everywhere, and it's like, whoa, I can't see how you can expect to be a success in business if you're not 110% committed. And I don't see much of that. So I think really, if you wanted to get into the sort of, hey man, this is how you become a success in life kind of podcast, all you got to be is 100% into what you're doing, and you'll do just fine. Yeah. And if you're going to go 80%,
most people are lazy. Most people aren't doing anything they've got any passion or any interest to. They're just doing it for the couple of grand a month or whatever it is. And so if you strip out the people who've got no interest, got no particular skill, nothing novel to add, you're dealing with about 10 people or 5 people in every 100.
I think that's true, but
like in any space, most people are just dead wood, and it's any company is driven by a fraction of the people who work at that company.
But I want to say something, because I think nowadays there are options. So if I see, for example, the son of my brother, right, he's in Italy, he doesn't like to go to school, and he spends all day on video games. He doesn't do anything else. He just play all day. He's 6 years old, but he's doing something, and he's actually quite good. This is why I'm saying that he's winning all the time. So maybe because now the next generation, the actually younger generation, have got option, they can focus on something they like. That's why maybe they are more engaged, and maybe that's why they get more successful, maybe, rather than just sat there on the nanny state and go to school and then just.
I think that it's always a mistake to think there's any difference between generations and setups.
All right.
I think that my generation was just the same as any other generation, and the people who are of a mind to really go all in on anything, they're a small group. And the obsessives.
Yeah.
Not that I'm an obsessive. It's the obsessives that do really, really well. Most people aren't obsessive. If you give them something to obsess about, or they become obsessive, then they achieve. So the engagement thing is just about whether that person is in an area with something that when they wake up in the morning, they're happy to go to it. And most people never get the opportunity, or given the skills or the vision to see that they can do something that they would just love to do, and that means that they are effectively disabled because they don't love what they do, and that's just crucifixion. If I do anything I don't like to do, I feel in my marrow just how horrible that is. And a lot of people, that's what they have to go through, because they've never been given the vision the opportunity, the belief that there's more out there than the thing that they're doing, and you know, it's I don't think there's any difference between then, now, and the past.
Yeah.
And there'll always be the people that go 100% all in on something, and a lot of people just will never get that enthused or engaged or have the opportunity to jump in boots first. Sadly.
Yeah, I think that's a good point. Yeah, it's good. I mean, you shouldn't always.
But this isn't about stocks. I want to know what's the best way to make money in the next 12 months.
Right, that's good. Okay, Zach, go on with your James. You've been doing quite well recently, so.
You can't have too many ways.
Share.
No, the simplest thing this week is just to say I would be buying almost, could throw a dart at a list of any mining company with a market cap of, say, less than £20 million. I think you do.
I'd
really...
throw a dart exactly the opposite end. I'd say throw a dart at anybody with more than a market cap of 20 billion.
Well, there we are. Maybe you could have a spread of the two.
Yeah, why not? Dumbbell. Mining dumbbell. Crazy and ultra crazy.
So any kind of mining, or would you prefer, I don't know, sustainable metals, or, you know, maybe gold?
Sustainable metals, what's one of them?
Yeah, it's the transition metal, the metal they use in sustainability vision, you know, sustainability future plan.
I'll tell you what, I've got no interest. I can't stand ESG, can't stand sustainability.
Yeah. We know that.
No, but actually yesterday I went to a presentation of a company called Sovereign Metals, which is a titanium
rutile. I know them.
Yeah, yes, rutile.
White paint, huh?
Sorry?
White paint.
Yeah.
That's what rutile's used for, white paint.
And toilet ceramics as well.
Yeah, I'm really into toilet ceramics. And so basically, normally when I attend these events, I fall asleep within 5 minutes. This one, I actually remember what happened, and I didn't fall asleep at all, which was very good. And it was the idea that that you can basically in this with the sort of the resource they have, the rutile is basically from the surface down to 14 meters. So you can basically just scrape it, the top layer of the soil off, put it through some sort of water, filtration system, and Bob's your uncle. No smelting.
Has it got rare earth?
It's titanium. It's just
I
titanium.
know, but rutile normally comes along with rare earth.
Yeah, so titanium and graphite. That's all they've got. I was listening very carefully. And thank you for trying to wrong foot me. And basically, so just those two substances. And the good thing about that is that there's no smelting involved, which means it's a great ESG play. So there's, it's kind to the environment. And once they finish getting the second largest rutile resource out of the ground, they'll put all the soil back and make a nice garden, and everybody will be happy.
Okay, so we have sovereign metals, and that's it. And
it's a pity you haven't got rare earth, because quite often rutile comes with rare earth. Because I take it it's not, because it's normally deposited. It's normally alluvial. It's like you've got a mountain and it washes the mountain into the sea, and then the sea picks it up on the beach. That's normally how that stuff works.
I didn't know that you had this kind of skill set. So you've wrong-footed me there. But no, it's just the two. I think it's just the two: the graphite and the rutile, which will be turned into titanium, which is there's a massive deficit in growing in titanium, and without titanium, we'll be lost.
We'll have no white paint for a start.
Our toilets would not be the same.
Exactly. Okay, well, we brought up something different today. Maybe
totally different.
Yeah. Maybe next time we can talk a bit more about gold. In the meantime, we see how it goes.
Well, if you want to know what I've been buying, which is a good question, because I have a bad habit of buying stuff and forgetting I bought it, and then finding I've got it. I'll just pull up, and so I picked up a couple of things in the last week or so, and I think I did, and I remember putting them in my marvelous ADVFM portfolio. And I bought some more. No, really, I bought some more Centrica.
Okay.
Because it's a gas, and what with all the energy things going on. Of course, they're going to get rid of all gas boilers in a couple of years now, aren't they? Yes, of course they are. Now there's an energy crisis. We haven't got enough. They're not going to be able to get rid of all that stuff because, you know, everybody's closed down their nuclear power because nuclear power is so dangerous. No one's ever died from it, but apparently it's, you know, bad stuff. And there's this energy pinch that we're going to have for quite some time. And if you put like 5 years on that,
oh, 5 years.
Scroll. Yeah, 5 years. You see, Centrica is not popular. Has not been very popular. And if you squeeze that bottom axis to show more years, no, squeeze it, not drag it. No, put it on the grey border, down a bit more, just a bit more, down. There we go. On the grey border, yeah, you had it there. Now you moved. You can stretch it. There you go. Stretch more.
That's the maximum.
No, it's not. Do it more. Yeah, there you go. So that'll do there.
Oh.
Now, if you then go to the right and you move it back so it's seen now rather than 2017 on the yellow, up a bit. There you go. Move it to the left now. There you go. You can see it has come down quite a lot, hasn't it?
Wow.
So, you know, it's one of those companies that's reviled
22
as terrible.
That's crazy. I mean, seriously.
Yeah. So, you know, any little bit of a bounce there is going to be happiness, isn't it? So I'm kind of quite interested in that one. And that was the only thing I've kind of picked up more of. I've already got a chunk of it, and I got a bigger chunk, and I've watched that fall, and now it's beginning to rise again. If you can go to the right hand margin, grey. Yeah, put your pointer on the right, not in the middle somewhere, not right at the bottom, in the middle, up a bit, up, on the grey, still on the grey.
Here.
Yeah, and then move it down a bit or up a bit. Yeah, out of the way, more, stop. Right, there you go. You can now see the full range of that. And that's British Gas. And they've been picking up all these new clients because of all its competition has been going bust, left, right, centre. And they've come along and said, oh, we'll have those customers. Oh, we'll have those customers. Yes, please, we'll have them too.
Right, they're almost the same price of the IPO, 68. Yeah. Wow.
I think they went below it. They're paying nice. I think they used to pay nice. But anyway, the point is that they've got all these free customers who've been basically had a good deal and then suddenly didn't have an energy supplier. So they're probably not thinking of going anywhere else soon. And, you know, that's the kind of chart I like. I like to buy at the bottom and sell at the top. Hopefully we've seen that bottom. Maybe not. You never know till you know.
Exactly. I mean, if we look at I mean, look, it's just all red.
Well, it will be. I mean, you know, we're that's the whole difficulty. If you look at the chart closely of the indices, we've now got volatility coming back. And volatility just means uncertainty. And uncertainty is bearish because if you don't know, you don't want to buy, do you?
Yes, so, yeah, maybe we have to wait March.
We are in a bear market, but whether that's going to be allowed to develop into a crash is another matter. I think we'll probably see something close to a crash in America, and then we'll see what's what then.
Okay.
Well, this haircut, I keep talking about this haircut. The world's taken a 20% of its wealth haircut because of COVID. So that's a process of normalization. To put that 20% back is going to take, you know, the best part of a decade.
It's funny because we say haircut, but actually when people have no money, they will go less to their dresses. So we see their hair going longer and messier. And the people who are able to do their haircuts regularly are actually the ones.
Best thing I ever did. Saved me a fortune.
Yeah. Okay. Right. Thank you so much. I think it was very, very interesting today. And yeah, let's see what's happened. And then we can tune in next week to talk more about market and stocks.
I want to know whether Zach has joined a monastic order, because I think it looks like he's in a monastery there.
Yeah.
And I think he's going to get his brother Zach.
I'm trying to, I just thought it looked sort of picturesque. So there we are. Yeah,
it doesn't look you are in a monastery or in a reclusion or something.
Recluse, yes, I think so. I mean, yes, I think that's it's appropriate for my mood this week. Ahead of Valentine's.
Don't take a vow don't take a vow of poverty now.
No, I think ahead of Valentine's Day, I think a monastery looks like the place to be.
Oh gosh. Okay, thank you everyone.